So, Animal Farm. It's claimed to be the first deflationary and fully decentralized ownership, yield farm and lending protocol. Now that's quite a mouthful, but we're going to have a deep dive here into what exactly that means and whether it's true. So first of all, if you want to get to the Animal Farm site, you can go to driptoken.tech/Animal Farm. The current launch time is, or was, depending on when you're watching this, 11 AM Eastern Time on Thursday, the 3rd of February. If you're watching this before then, check out my other video that explores how to prepare for launch and what strategies you might consider. But to summarize, funds have been raised during 2 pre-sale mechanisms, and those funds are now being deployed to generate early returns through buybacks, liquidity and other mechanisms in the latest stage, which is Animal Farm. So we won't spend too much time looking at the previous stage, the Manor Farm, which is called layer 1 of the ecosystem. Since that only lasted for 14 days, it's already over. You're too late for that for sure. Over $1 million was raised for that, which, as I said, is being used to help successfully launch Animal Farm, providing liquidity and other benefits. Anyone who farmed on the Manor Farm got the Rev token, which gives instant access to the Animal Farm at launch, which is layer 2. So during the first 30 minutes of launch, people with the Rev token have instant access, and they get a 20% bonus on the price of their dogs and pig tokens, or 20% increase in the amount of tokens that they get. So what's actually expected to happen at the launch of Animal Farm? Well, the developer behind it, Forex Shark, is known for deep thinking and excellent execution when it comes to logic and token design. And it looks like everything has been configured to really encourage people to fight to enter the protocol as quickly as possible. And with a fairly low level of initial liquidity, this could force up prices quite rapidly, as well as providing an early flow of rewards to those that are staked in the platform close to the beginning. Since there are long-term yields that are going to pig stokers through the design, there will be competition, particularly in the early days, to earn the highest percentage of the total as quickly as possible. Many will choose to reinvest all of their yields, all of their profits that come through the farm into long-term benefit and bigger ownership, a larger percentage ownership of the farm by holding more of those precious pig tokens. So most people will miss the launch phase, and that's not what is most interesting about this project. What is super interesting is that it's designed to be deflationary and therefore to improve the typical longevity of the yield farming and lending protocols. So we'll look into how and whether it is deflationary, exploring the key mechanics such as BUSD rewards, buybacks, taxes, drip feeding some of those rewards, as well as governance and something called the DDSCA, which is an algorithm that manipulates the rate at which tokens are released in order to hopefully encourage long-term price appreciation. So how exactly is the Animal Farm different? Well, we've got this phrase, the world's first deflationary, decentralized yield farm and lending protocol. So what do all of these terms mean? Well, deflationary, here it means managing the supply of tokens in many respects, thereby encouraging price increases. It's the opposite of inflation, which is generally what you see on this type of projects, where there's an oversupply of tokens, too many tokens being released, too many tokens being sold into the market because they're being earned on the platform, and people cash them out for other tokens. So this normally results, due to normal pressures of supply and demand, normally results in the price of those tokens dropping, and ultimately can mean failure of the entire project. So here, deflationary measures are used to restrict or manage the supply so that tokens retain their value long term, hence deflationary. What about decentralized? Well, that is a standard term in DeFi, decentralized finance. That's where we are at the moment. Animal Farm is a DeFi project, so by definition it should be decentralized, and it really means that there's no individual or entity in control of the protocol. Once it's launched, the developer releases it into the wild, and then you can depend on the code to perform the functions as designed and as explained. So there's common ownership and management here. We'll see how that works. People using the platform can vote on what happens with it in future, and everyone shares in the rewards from the platform. So what about yield farm? What is a yield farm? Well, it's a type of DeFi platform or protocol where you earn a yield, you earn profits in return for staking or lending tokens. It's, in a way, it's akin to planting seeds and growing them, hence the term farm. What about lending protocol? Well, lending protocol is just a type of platform or protocol that lends crypto tokens to others. The entities borrowing those tokens pay interest on their loans, meaning that you can lend your tokens out in return for a profit. So yield farming often works together with lending protocols because the platform enables lending using the tokens that have been deposited by the yield farmers or the lenders, in other words, and shares the rewards with them. So getting more into why your animal farm is different to other types of yield farms. Well, it's built by the developer of the DRIP network. That is a deflationary fixed yield protocol. It's been wildly successful so far, at least, and the developer Forex Shark, who's increasingly respected for his work on the DRIP network, has been looking for a yield farming partner for that project. He couldn't find anything that was up to scratch. He decided to build his own yield farm that was. So as with DRIP, the idea is to provide more sustainable long-term yields with reduced price pressures, which are therefore deflationary rather than inflationary. So just to get more into this problem with yield farms, you can check out my other video where I go into more detail in this, but here is a quick explanation. One of the big problems with yield farms and lending protocols is they generally reward you with their own token, which you can then sell to cash in on your rewards. So we can see here the lenders, the yield farmers, they put their crypto into the platform lends it out to a borrower, the borrower pays interest back to the platform shares that interest, shares that profit back to the lender. But often it's in the form of their own token, and when the lender receives this token, they tend to sell it so that they can swap it into something else and go and make profits elsewhere, or to redeploy those other tokens into the platform. This results in increased supply on the market of the new token, of the platform's token. That forces the price down. This is an inflationary issue because there are too many of these tokens coming onto the market and they end up exceeding demand. Token price crashes. So what can look like attractive returns of tens or hundreds or even thousands of % a year on some of these platforms, they can actually result in you losing money because the price of the token drops by a greater amount than the rate at which you earn that token. So Forex Shark has designed this entire protocol, the animal farm, to avoid this core problem. We'll find out more about how is designed that and whether it's likely to actually work. So on to the farm mechanics for layer 2, which is the animal farm. Layer 1 was, of course, the mana farm, as we saw. You can, of course, scan this information in the white paper yourself. If you go to driptoken.tech, you'll get links to the white paper, and you can see the key explanations by Forex Shark here. But I'll provide my own run-through of this, so it's easier to understand. So we'll start with the core tokens of the platform and look at what those do. So the dog and the pig tokens are the core tokens in the animal farm. So dogs in Orwell's book, Animal Farm, they're the smartest animals, they're companions to the pigs. And here they're the main reward and the utility token which you'll earn if you stake most of the single assets or paired assets that are available to be staked or farmed in the liquidity pools on Animal Farm. So what use do these dogs tokens actually have? Well, they can be staked to earn the second token, the pigs token. So you can do this by either staking dogs on their own in the pools here, or you can pair dogs with other tokens such as BUSD or BNB in the farms. You see here. Note that there's another way to earn pigs, and that is by pairing drip with BUSD. If you're not too aware of drip already, you should be. I've mentioned it previously. You can check out my deep dive video on my channel about that. But this is the only non-core token that you can use to earn pigs. We'll get into the various other tokens shortly, but let's explore what happens with the dog token. So a key part of the deflationary mechanics is tax. And although taxes, of course, don't sound too attractive, they're actually central to the design of the animal farm, and they help provide rewards to you if you're invested for the long term. So most of the things that you do with the dog's token will be taxed at a rate of at least 6%, and half of that amount goes into a vault which pays anyone staking the pigs token. The rest is used to add liquidity into the dogs and BUSD liquidity pool. Now, why does it do that? Well, because it creates buy pressure for dogs tokens, which pushes price upwards to the extent that it counteracts the number of dogs that are sold by users. And of course, having liquidity there is always handy for anyone that wants to interact with those tokens. So the 3% tax is also applied to sales of dogs in addition to the 6%. That is used to burn more tokens, which again reduces supply, again pushes price of the dog token upwards. So there are also fees on most of the pools on the farm. This can vary between 4 and 6%, depending on which tokens you're using. And again, that's split into two purposes. 70%, 5% of it goes into a vault, which again pays stakers of the pigs token. 25% of it is sold into BUSD and then goes into a vault where it's paired with the dogs tokens. That's where the BUSD comes from to match the dogs tokens that we already saw taxed through dogs transactions, and they go into that liquidity pairing. So you can see here, you can get an idea that this whole process can help avoid some of the typical deflationary, inflationary pressures that are experienced in most yield farms. And we'll see exactly to what extent that works once we've launched. But there are other mechanisms at play here as well. So on to the pig tokens that you're earning when you farm or stake the dog tokens. As in the book, the pigs represent common ownership. If you own and stake the pigs tokens, you own a percentage of the farm itself. You get voting power as well as BUSD earnings. Now, where do those earnings actually come from? Well, firstly, as we saw, capital has been raised during the pre-launch period on the sister site, the Manor Farm. This adds up to millions of dollars at launch. Also, in the long term, from the tax vault that we mentioned when exploring how the dogs token works. And finally, it seems that there are yields coming from PancakeSwap as a result of staked tokens being deployed over there on their lending protocol. So this is what helps bring in sustainable long-term rewards instead of everything being entirely insular. So if we look at why the pig token is paying out in non-native tokens, in tokens that haven't been created by the Animal Farm platform, Well, the BUSD is Binance's version of a US dollar stable coin. And the fact is that most rewards on the platform are paid in BUSD rather than the pig and dog tokens. And pig tokens aren't likely to be sold once they're staked because of the benefits. This means that there's minimal downward price pressure on both the dog and the pig tokens, especially when you combine that with all of the other features such as buybacks, etc. So people are selling the BUSD token instead of selling the dog or the pig tokens that they're earning. That's a key difference with many other yield farms and lending protocols. So 30% of all BUSD rewards that are paid out go immediately to stakers of pig. You can claim and sell those to cash out profits, or you can choose to buy even more dog and pig tokens with them to stack your gains, again increasing buy pressure, increasing upwards price momentum for those tokens. The other 70% of BUSD rewards are immediately fed into a vault. They're automatically reinvested, and that vault pays out 3% daily to the stakers. So again, of course, this is encouraging people to stay staking those pig tokens long term instead of going in and out and panicking due to any short-term problems or price pressures on the site. Of course, you also get governance, voting rights when you stake your pig tokens as part of ownership. So new proposals can be suggested by pig stakers and voted on by other stakers. These are typically likely to be proposals for partnerships with other projects, as well as changes to taxation or other mechanisms in the farm. All of those will be voted on based on their ability to generate further yields and benefit for everybody that owns the farm, as well as price appreciation for the project tokens. So there will be short-term locks on voting pools as well to prevent easy manipulation of the voting process. There have already been a few initial partnerships that have been announced by Forex and the community, and those partners will donate some of their own token supply to be used as rewards on the farm when staking their token together with the dog's token. And you can see again that this reduces the likelihood of dogs' sell pressure, since people farming those tokens will be selling or reinvesting the partner project token instead and buying more dogs instead of selling them. There's also a benefit, of course, in cross-promotion, bringing in new users from those other projects, again resulting in a demand increase for the platform and its tokens. There's also been a recent announcement that there will be a 3% tax on selling pigs, again used for token buybacks and resulting in upward price pressure. So just a worthy mention here of drip. As we saw on the site, there are a bunch of other tokens other than dogs and pigs that we can pull and farm. So this means you can generate returns with tokens that you already have, such as Ethereum, Ether, Bitcoin, BNB, and a variety of stable coins. All of those can be used to earn dogs, with one exception, the drip token. So since Animal Farm was built by Forex Shark, who also created drip, there is a connection, there's a link between the projects. As a result, drip is the only non-core token that you can use to earn pigs, and you can do it by pairing with BUSD and farming it. There are lower fees for doing that versus using other non-core tokens. So if you own drip, you don't want to keep it all in the drip network where it pays out 1% daily, you can deploy it here. If you have other coins, you can easily create a new drip BUSD pairing by depositing BUSD into the drip liberation page at the Manor Farm, which is the previous incarnation of Animal Farm. We can see that here. There you avoid the 10% transaction fees that are normally incurred when you create a pairing of drip over at PancakeSwap. So once you've done that, you can come back to the farms page and it should be available to deposit into Animal Farm here. And then the rest. So you can see many of the most popular tokens are available here to be farmed. We've got Bitcoin, Ethereum, USDC token, DAI, Terra USD, Cake, which is very popular on the Binance Smart Chain, Belt, which I don't know too much about, Polkadot, and Link, the Binance Smart Chain versions of those tokens, can be farmed over in the pools. Again, the same kind of array of tokens. Some of them are available to be staked on their own without having to pair them. So this is particularly good if you don't want to sell any of your existing tokens to buy dogs for whatever reason. You may find that the yield on those tokens at Animal Farm is better than what's available elsewhere and sometimes on their native networks. It might be worth bridging over. So the process would generally be either stake them individually in the pools or turn them into a liquidity pair at PancakeSwap and deploy them into the farm. As always, the standard way to pair tokens on the Binance Smart Chain is to come to pancakeswap.finance/liquidity, add liquidity, choose the two tokens, and add equal amounts of them, equal dollar amounts of them to create a pairing. You supply here, create the liquidity pairing. Once that transaction has gone through, you have the LP and you can then deposit it into the Animal Farm. So you'll then earn dogs tokens by pairing any of those non-core tokens on the farm. When you harvest those, you can, as a second step, invest those dogs tokens into the pools or farms and earn pigs. And as a final step, harvest and stake the pigs into the pig pen. Let's take a look at how that works visually. So you would start here with any token. Ideally, it would be BUSD, and you can swap those tokens. As I said, ideally BUSD. There is going to be more liquidity when you're swapping BUSD into dogs, so it's the easiest and probably the most cost-effective way to get into the Animal Farm. So you swap your token and buy dogs. You then stake those dogs either on their own or paired in a liquidity pairing into the farm. That then earns you pig tokens over time, which you can harvest. Once you've collected or harvested those, you stake them into the pig pen. That earns you, along with the governance rights, it earns you BUSD, and you can repeat the process to compound earnings. And the faster you do that, and the more that you do that, the more ownership of the Animal Farm you'll end up with, the more pigs tokens, and the more earnings you will get. So let's zoom out a little and see how that process involves the various taxes and rewards that are involved in the deflationary mechanisms of the Animal Farm. So here we can see some of the taxes that occur when you're buying dogs and staking them, depositing them into the platform. So now we can see more detail and get an understanding of where some of those fees and taxes and rewards actually go. Starting with the 6% tax on the dogs. Every time someone buys dogs, 6% of it is taxed. Half of it, 3%, goes into the vault to pay pigs stakers. The other half becomes this half of the dogs BUSD liquidity pairing. That builds up liquidity, which is beneficial for everyone in the platform. There's a deposit fee for staking any tokens, and for dogs, that's no exception. We don't know exactly what that fee will be. It will be variable, I think, but whatever the amount is, it will be split up in these ratios. The vast majority, 75%, will go as BUSD rewards, again for the people staking the pigs tokens. 15% will go as marketing to promote the platform, and 10% as platform fees. If we spin around to the rewards, so all of this value coming in from the taxes is going to the pigs stakers. 30% of that is paid instantly to the pigs holders proportionally according to what percentage of the total staking amount each individual holds. The remaining 70% is put into a vault and it pays out a daily reward of 3% per day. Note that there are some additional taxes for selling the core tokens on the platform. Those aren't shown in the value flow because generally you aren't likely to be selling in this loop. 3% though is charged for selling either pigs or dogs. Now you should note that this is on top of the 6% that is charged on pretty much any dogs transaction, meaning that you actually pay a total of 9% tax when you sell dog tokens. That extra 3% is burned. They destroy those tokens, which of course results in a reduction in supply, which in time should push price upwards. Then there's also the animal farm lending protocol. So as mentioned already, there is revenue coming in from deployment of tokens that are staked into the PancakeSwap, which is the biggest DeFi platform and decentralized exchange on the Binance Smart Chain. Very safe, very stable. So this comes, as I say, from lending liquidity based on the tokens that are staked into the animal farm. And as a result, stakers are not only benefiting from the liquidity mining in the animal farm, which would often result in having to pay out directly in the platform tokens rather than being able to provide these BUSD returns. This revenue coming from this lending strategy gets back into animal farm through the buyback protocol, which takes dogs and pigs tokens out of circulation. It reduces the supply of those. Some of it is used for marketing and dev work and platform costs as well as into reducing gas fees for transactions on the platform. And this is interesting. It's particularly helpful for users who have smaller amounts invested in the animal farm. And that's important because the contracts here are more complex than is typical for a platform like this. So that would otherwise result in higher transaction fees versus more simplistic projects. And that's something that would put off smaller investors and might be seen as quite unfair. So that's interesting. And then in addition to all of that, there is the DDSCA, which stands for Decentralized Dynamic Supply Control Algorithm. This is another innovation by Forex Shark. It's designed to restrict supply at times where there's lower demand for the tokens and to accelerate that supply when it's in higher demand. Again, in order to help smooth out price and reduce downward price pressure at the times when it's most urgently needed. To put it another way, it avoids inflation and is therefore another key part of the deflationary arsenal that he seems to have put so much thought into as the key differentiator with other yield farms. So how does it work? Well, normally yield farms emit their tokens at a set rate, regardless of the demand for them or whether the price is increasing or dropping. We've seen hundreds, thousands more likely of such farms that after an initial excitement leading to price increases fall into a sudden and terminal often decline once sell pressure exceeds new demand. This is a negative feedback loop since once people see that the price is dropping, new demand from new participants for the token evaporates. That further reduces the price, and it's this loop that Forex Shark is targeting with the DDSCA. So with Animal Farm, he's built in the ability for the contract to detect the current price and adjust the emissions based on whether it's increasing or decreasing. And the core of this is a peg emissions value. And if the price of either token hits a new all-time high, the emissions rate will increase to 25% above that typical standard pegged rate. If there's a sudden price drop and it goes down by greater than 25%, alternatively the emission rate is dramatically reduced to 25% below the peg, and it stays at this low rate until the price recovers. And then if there is a severe price drop, the emissions can decrease up to 50% below the peg. And in addition to that, the buyback protocol, using all those accumulated tokens from the other mechanisms, that activates and again starts by increasing buy pressure, thereby reducing supply and hopefully bringing the price back to peg. So together, these mechanics are all planned so that they will result in price appreciation per token rather than just overall market cap appreciation, which can make a project seem positive simply by issuing more tokens rather than actual providing value to existing token holders. So let's just have a further look into DRIP and how that interacts with the animal farm. So we already saw that there's one way to earn pigs tokens that doesn't involve the dogs token, and that's by pairing DRIP with BUSD in the farm. You can see my deep dive into DRIP and elsewhere and how Forex Shark has so far at least managed to engineer more sustainable upward price pressure despite very generous daily returns of 1% of deposited tokens. In simple terms, in DRIP, you purchase DRIP tokens, you lock them in forever, and then benefit from 1% of your locked tokens every day for 365 days. This results in you receiving at least 3.65x the initial amount of DRIPs that you purchased. More if you reinvest any of those daily returns, since you also get 3.65x of those reinvested DRIPs. So the percentage returns over the long term have been phenomenal so far, if 10 months can be called long term. And so quite sensibly, many have questioned how sustainable the prices of the DRIP token will be long term. However, there are new use cases, animal farm being one of them, and they're part of the strategy to increase the longevity of the project. So DRIP BUSD farming on animal farm adds to further demand for the DRIP token, and together with the reduced deposit fee, which I believe is 1% on the animal farm for DRIP BUSD, this brings more value to the DRIP ecosystem, benefiting the holders. So far, anyone invested in DRIP in the 9 or 10 months up to the end of January has seen absolutely fantastic returns. That includes myself, from a combination of this reinvesting and compounding function, referral rewards, as well as the significant increase in the price of the token. If you want to find out more, you can join helpful Telegram groups about DRIP, or watch some of my videos, check my channel on YouTube, or head over to driptoken.tech. But with regard to animal farm, if you want to use DRIP, you can get into that DRIP BUSD liquidity pair without paying the usual 10% tax and instantly start earning pig tokens, not just dog tokens. So this is, as I said, the only token you can earn pigs with other than the dog token. So you do that by using that DRIP liberation function on Manor Farm. I expect that to cross over to and appear at the animal.farm/DRIP liberation soon, but for now it's at the manor.farm/DRIP liberation. So you go over there, deposit BUSD, and you'll get in return a DRIP BUSD pairing that can then be dropped into the farm page at Animal Farm. So that's it for this video. I hope that was useful. Just quickly, if you want to join Animal Farm or learn more about it, go to driptoken.tech/Animal Farm. Or if you want a direct link to the Animal Farm itself, go to driptoken.tech/animal. You'll find on my website loads of links there, including videos and articles on both DRIP and Animal Farm, as well as links to tools, calculators, white paper discussion groups, and more. I hope you found this useful, and best of luck in your adventures in DRIP and the Animal Farm.